Yep. And it's a presenter view. No, sorry, it's a audience view, Nitin.
Uh, are you guys able to see the screen?
Yeah, I'm able to see the screen.
Yeah.
Okay. So I think they are able to see Sonal.
Yeah. I just want to ensure like it's a audience view, not a presenter view, like with my notes there. So I think it looks like a audience view.
Yeah,
So it
it's
should.
it's an
Yeah.
audience view.
Okay. Yeah. All good. Yep. So we can go to the. So welcome everyone. Welcome to the product economics session 2. We are today's agenda is that we will do a little bit of introduction again, of course, of who am I? This is a strange person talking. We'll do a recap of the first session so that we go on to this journey, remembering what we learned. And, and sorry, can I have if anyone is not on mute, can I have them on mute, please, so that I don't hear. And then we will be discussing about the components of a balance sheet. And this is anyways handy. Doesn't matter if you're a PM or not. And you could be starting your own business, but it's a very basic information that you will need to know. We will talk about how can PM analyze balance sheet and how can product manager then use this information. Okay. And then after that, if you and I are still awake, we will go through questions together. Um, Yep. All right. So next slide, please, Nathan. Yep. Great. So I am Sonal, and I've been a product manager for over 9 years now. Currently, I'm a go-to-market manager for an energy company in Australia. And I've worked basically more on financial products and digital products. And today's session, to be very clear, what we are not going to give you a complete understanding of balance sheet is huge, right? So we're not going to go through every component of it, but we are going to go through the components that we know are really good for you to know as a product manager or even as a person, even if you're investing somewhere, it would be good for you to understand that basic information to read that about a company. All right, yes. So the next slide is there. Uh, we talked about last time why a PM should care about financial statements, and what we spoke about was that it helps you to understand the product contribution to the company's success. It also helps you to better position the product. It helps you with your critical decisions like, do you want to decommission the product? Do you want to go ahead with more further investment in the product, right? So this is, and also as a product manager, it's important for you to understand my product, how much financially is it contributing to the company's success, which I find more driving, especially when you are working in a financial product, because it's all heavily revenue driven. And you learn more about the competitors, right? So there is, of course, if they are public listed company, that means you will get a lot of information about them from their financial statements. So personally, like, I was working for a startup, and over there, it was a wealth platform, so I used to do a intense amount of, like, research for the competitors, what are they doing, a complete in-depth competitor analysis. So this is really handy for you to know. And also, as I mentioned last time, if you land an interview with them, you're getting brownie points anyway, right? We'll move on to the next slide now, Nitin. So we talked about there are three type of. Sorry, is this there should be a slide before this? Yeah, correct. So we talked about three type of financial statements: income statement, balance sheet, and cash flow statement. So this session is dedicated to balance sheet. In the last uh, session, we spoke about income statement. In the income statement, we talked about revenue, cost of goods sold, operating and other expenses, operating profit. And we also talked about that, first of all, cash flow statements are quite important, but to understand a cash flow statement, they're quite complicated. So for that, you need a basic information like income statement and balance sheet. You need that understanding before you move on to the complicated stuff. Now, what is income statement? Just to jog your memory, income statement is literally for any period of time. It could be for a month, it could be for a certain number of days. It talks about, how much revenue pretty much you gained, how much goods, how much sales actually you made in that particular period of time, right? What is a balance sheet? Balance sheet describes company's assets, liabilities, stakeholder equity on a specific date. So they are like really handy to understand. And when we talk about cash flow statements is all about, how the cash is moving into the company, how the cash is going out of the company. And for a product manager, cash operating component is very important to understand. Now, when we spoke about revenue, we also spoke about, as I said, that it's a sale that is recognized in a period of time, right? So, for example, like I run a company and my financial year is ending at, say, 31st of December. And for me, whatever sale I did, say, for example, till March, for example, like I made a sale and my financial year is ending on 31st of March. I made a sale in, say, June. So I'm only going to count for it from June to not July. I'm only going to count my sales from June to the March. That's when my financial year is ending. Sorry, I had to actually think about it that India financial year ends on 31st of March, right? For us, it's June. So that's I'm so used to thinking about in June that took me a little bit of time to think about from March perspective. Also, what is cost of goods sold? They are the direct cost that is associated with your goods or services to the customer. So whatever you are spending, for example, the systems, the call center, the cloud hosting, integrated third party services, everything comes under that. Your operating expenses are the cost that is related to ongoing operations, research, development, marketing, sales, general administration. Your other expenses are like tax, depreciation, and other items. And your operating profit is pretty much, revenue minus operating expenses. That gives you an operating profit. Your net profit becomes when you deduct further other expenses from it. So this is just a recap of what we discussed last time. So that's why it was a little bit speedy, because we just wanted to give you a little bit of recap before we move on to the next component, okay, which is a balance sheet. But I'm still gonna just pause for a second in case you, after the last session, you had any question which you didn't get an opportunity to ask. You can feel free to ask it at this time before we move on to the next component of balance sheet. Any questions in chat or anywhere? All right, so I'll keep going. Can we go to the next slide, please, Nitin? Yeah. So what are balance sheets? What we know of is that they are a critical document because they keep product manager or you as a business owner informed about company's financial standing, right? It is one of the major financial statements that you can use to track spending and earnings. It also shows what company owes and, for example, what is its assets, what does it own, and what is it owes, what is its liabilities. It helps current and potential investors better understand where their funding will go, what they can expect to receive in the future. It helps bank to know if the business qualifies for additional loan or credit. And I think in one point or the other, we all have seen, like, we have all talked about balance sheet, we have touched on it. And this is kind of the basic, just on a surface level, that we know about that. Now, it's extremely important for you to read and interpret, balance sheet, because, as I said, it offers a quick financial standing. It lets you know how the business is performing. Without this, if you actually proceed ahead and make any decision, it could have some negative impact, because that means they are pretty much taking a shot, in dark. You're literally not paying attention to what is the current standing of the company, which is highly important for you to do. Even if you are owning your own business, right? If I do sell t-shirts and I don't know if I'm going in loss or if I'm going in profit, how can I make another decision about it? Do I add in the product line or do I continue investing in my t-shirts because they're doing well. Pretty simple example, but that's how you use it on a day-to-day basis, right? um, and it is a statement of a it does why it is a statement of financial statement, but why is it important for you to know? Because at the end of the day, as a product manager, you may not be an accountant, you may not be completely well equipped to completely understand the balance sheet, but you will be heavily talking about it when you're talking to your leader, when you are anyways giving a backstanding about your decision, that why I went ahead about it. So it's always better to have a financial person who can actually be your ally, in the company, who can guide you through this. But it's always important to understand the basic terminology so that you can have those conversations and you're not starting from the very basic, because everyone should at least know what asset, liabilities, debt, stake your stakeholder or a stockholder equity means. um, if we can go ahead to the next um, slide, please. I'm just going to pause a bit here about balance sheet, if you have any questions or anything further that you would like me to elaborate on. And sorry, I can't see you guys because I've got a limited screens today. My one of the screens is not working, so pretty much I'm literally talking in blind today. Any questions, Nitin? No. Okay. All right. And it is also why the balance sheet, the reason it is very important, anyways, for a small business owner is also because it actually gives you a business net worth, right? It helps you identify the trends, as I spoke about, particularly when it comes to your relationship with the customer, with your suppliers. Are your customers taking longer to pay? Is the debt more of a company? How much assets do you have? For example, if I have a digital print company, if I own a printer, that's my asset. But whatever money I took to buy that printer, that becomes my liability, whatever loan I took from there on. So now we'll talk about assets. So assets are any items that are owned by the company. So there are two type of assets. One is current and other one is non-current. The current assets can be turned into cash within a year, and long-term assets, that means a non-current asset, can stay onto your balance sheet for years. So, for example, cash, your marketable securities, your account receivables are all example of current assets. Items like, you're buying a property, you're buying the equipment, intangible assets, goodwill, deferred tax assets are all examples of long-term assets. Um, it's important to note that items like goodwill and intangible assets are non-cash items because they cannot be readily, converted into cash. So if a company, for example, product managers should see a red flag if these type of non-cash assets represent the majority of the company's asset. So that is one thing that you should look for. Assets, what are the current assets of the company and what are the non-current assets? If non-current assets, if these kind of assets are making a lot more of a company's in the asset section, that means it's a bit of a red flag, because clearly company cannot make that into a cash very very easily if they need it to be. Now liabilities are, the two again type of liabilities, short term and long term. So they're also got current or non-current. So current liabilities represent payment obligation your company has to pay within 12 months to the date on the balance sheet. So, for example, an outstanding bill to an equipment supplier could be a current liability, as could be the salaries payable, income tax payable. So, all these are examples of short term liabilities. Now, when you talk about long term liabilities are the amounts that company has more than a year to pay, right? So, for example, your bank debt, when you take a loan, your bondholder, they are all considered a non-current liabilities. Any questions so far? Nothing. All right. When we talk about debt, debt is something, so there are again two type of debt, now debt is of course component of a liability, so you won't see debt separately onto the balance sheet, but debt is something which is due within a year, that goes into current liabilities, and whichever one is due post 1 year, more than 1 year, goes into long term liabilities. Now, another component which is quite important in a balance sheet is a stockholder's equity, right? So, equity is the amount your company, shareholders own. So, you've heard about a lot about your share price, what does the stockholder equity mean? So, it's pretty much any remaining amount of asset that is available to shareholders after all liabilities have been paid. So it is calculated either as a firm's total assets less total liabilities, or the sum of the share capital and retained earnings less treasury shares. But I think let's keep it simple for now, total assets less total liabilities, if that could be the very simplest form to a little bit get an understanding. But depending on the company, they could actually go both ways. Now, from a product manager's perspective, again, stockholder equity is a sign of a relative health or a distress of a company. So, when you're looking at positive stockholder equity, that indicates that company has created value for its shareholders. Negative stockholder equity indicates significant problems. The company liabilities exceeds its assets. So, that is also another thing that you should look for. Any questions for when we spoke about all these four components? All right, next slide, Nitin. All right, so this is just an example of balance sheet, just to show you that how the current assets are um, mentioned in a balance sheet, how the non-current like property and equipment and other assets are mentioned. And logically, as we've been told in accounts, of course, they should equate these total liabilities and shareholders' equity should come to total assets. That I remember during my college days, uni days, for my Bachelor of Business Administration, I used to have an accounting exam in there too, and how much I stressed over, balancing my balance sheets. So I'm glad I don't do this for living, like balancing them, because I've seen quite stressful accountants in my company. Uh, all right, so we'll go to the next slide. Now we'll talk about the techniques that now you understand, okay, what balance sheet is. You've gotten that little bit of understanding about it. But we'll talk about how, okay, as a PM, you can analyze the balance sheet, because that's more important, right? For you to, you're like, I've got the basic concepts, but how does it come handy for my job? So there are two things that you can do, two techniques I would say that you can use. One is change over time. So change over time, if you see the example onto the slide, is how for current assets from 2019, it's quite self-explanatory, but see, from 2019 to 2018, we are actually talking about what is the change, right? Has it decreased or has it increased? So this, in this case, it has increased. What are the receivables look like? What is the merchandise inventory look like? So you are monitoring the change over a period of time. So for example, 2018 to 2019, did it increase, did it decrease? You're looking at that percentage. Sorry, just give me a second, technical issues. So pretty much this is how you will calculate the change. The change should either show you dollar value as well as the percentage of the change, the percentage that has happened. It, what does this percentage do? It actually shows you the dynamics that are driving the business, right? So for example, what you should be thinking about is and not entirely just from a product perspective. And I'm sure there will be accountants who will be completely looking into it. But from a product perspective, you should be like, okay, why are the changes occurring, right? For example, if my merchandise inventory, is not increasing, it's decreasing, why is it happening? If my receivables are going down, why is it happening? These are some of the questions that could be asked, and that you should think about when you're doing the creative thinking about your product, because this is all where you get your information, and from the competitor analysis, from the marketing analysis, this is where you actually put your creative thinking on when you completely analyze the situation. So one of the biggest thing that you will do is analyzing these financial statements to get an understanding of the health of your company. Then you will do a competitor analysis to get a health of check of all the other competitors, what are they doing in market. And then there's a market research that you do. Market research talks about what are the newbies, if someone could be entering into the market, what could they be bringing in, what is a market share look like. So all these three components, once you have a good understanding, that's when it helps you to do creative thinking. And to be very honest, no one expects you on a day one as a product manager. This is over a period of time. You learn when you are in the company, when you speak to so many people, you learn about their areas of business. That is how you build up on this knowledge. What I'm talking about is my 9 years of experience. And trust me, even if you would ask me 3 years before, that I did do accounting, but 5 years before, when I started working for a startup at that time, I didn't pay much attention to financial statements. Because prior to that, I was working for a huge company like GE's, right? So this is where uh, we would get an understanding of the company's financial, but we won't pay too much attention. And I was a junior PM back then. But as you progress into the role, you have more relationships, especially with the finance and accounting team. That's when you start getting into all these additional layer of understanding. So I just don't want you to be overwhelmed that, hey, I need to know this from day one. But definitely you need to know the basics at least from day one so that you can have those meaty conversations. Let's go to the next slide. The other technique that we spoke about is debt to asset ratio. As you can clearly see, the debt to asset ratio calculates how much companies' assets were purchased through debt, and the formula is total liabilities, divided by total assets, like we have shown you here. So debt to asset ratio is 1.31 in this case, for example. So what does this 1.31 mean? So as a guideline, over 1 high you have more debt than assets, the business risk level. Sorry, can you go back, Nitin? Yeah. 0. 0.6 and higher, that means high you may have trouble borrowing money, and 0. 0.4 and lower, that means it is low. So this is again just to understand. When someone talks about debt to asset ratio, you should know first of all how to calculate it, and you should know, okay, what does it mean? Someone is talking about 2%. What does this mean? So it's just a guideline. Next slide.
Ma'am, am I audible?
Huh?
Ma'am, right now you told, right, debt to asset ratio, if it is 2%, it's really high, right?
Yeah, yeah, yeah. So over 1 is considered high.
Okay. Ma'am, and then one more question. Before I could not mute my mic, so I had a question. Is a share, stock and equity the same thing?
Yeah. So
It is
yes,
the
so
same
it's a
thing.
shareholders equity. Yes.
So
So share.
so if I buy a stock, am I buying the equity of that company?
Yes, you are.
Okay.
Yeah,
Yeah.
yeah. So thank you for the question, first of all. That's really good so that I know people are listening to it. So we'll talk about now how you can use that balance sheet information, right? So this is again, one is customer analysis. This is more like a B2B scenario, and the other one is competitor analysis, right? So B2B, especially product managers, can use their understanding of a customer's balance sheet to get more effectively position their product offering. So For example, let's just think about an example here on the go. So I may be, blabbering. So bear with me. For example, I'm a software company. I make a software. A. Nitin's company wants to get that software from me. Okay, so they're negotiating. They're telling me to bring the price down. Now this is B2B, so it could be, for example, my software could be costing them $1 million, right, to invest into their company, to get it all integrated into their company, plugged in. Now Nitin's company is negotiating with me. They're saying no, we will build a solution ourselves, right? And don't worry about it, either you bring the price down or something like that. Now, for example, if I am and because the reason I'm using, and this may sound like a sale, but in a B2B product manager, sale is also a big component, right? You work heavily with the sales team, right, to because those are the big deals that are happening. This is where you're getting the customer. So at that point, if I was a product manager and I would have seen the balance sheet, and for example, for me, the balance sheet shows that they don't even have that much cash enough to build a solution, right? I don't think so. They have that much borrowing capacity. That so we based on that information, I can price my product correctly, right? I may not go down to 500,000 because I'll be like, okay, the company has $1 million to pay. They don't have money to build a solution themselves. That means we are going to stick to our price. So this is where it helps for customer analysis. Yeah, thank you. So this is where the customer analysis helps, right? And in B2B, especially, that I'm just iterating again, as a product manager, there will be a little bit of you work really, really closely with the sales team. So this is where that information will come handy. Um, and for example, like if I was in when I was in wealth platform, right, we had again B2B transactions. We didn't used to directly work with customers. We would work with financial planners. We would work with biggest wealth platform, wealth providing companies, who would be wealth managing of all these rich people. So this is again, they would negotiate their price, right? They would say that we can have this technology inbuilt, we can do this kind of trade, for example, from a New York Stock Exchange ourselves. But when you will actually see that they don't have licenses, maybe they will have that much, requires a lot of investment. They don't have that investment, so we can use it from our platform. So again, that came handy. And competitor analysis is, it of course it helps you to understand their performance, their assets, their liabilities, and especially financial statements, not just talking about balance sheet here. The reason they're really good for you to understand is because there is a component in a public listed company in the financial statements where they talk about their future investments. So where they actually talk about where they're going to invest their money or what is the next focus area for them, because this is where they want their shareholders to feel comfortable that wherever the money that they're spending. Now sometimes it could be a technology uplift, sometimes it could be launching a new product into the market, sometimes it could be, for example, if I am for example, I'm a company like Apple, and I am now saying I'm going into buy now pay later, going into absolutely new territory. So this is where it gives you a lot more information that what are they doing, are they going to continue investing in their own self and just a little bit of technology uplift and nothing more, or are they going to do something really monumental, and that you can keep in mind. Either you can explore that or not. That's not what you're doing, that you're just copy pasting whatever they're doing. But it is always good to know what your competitors are up to, so that if that's something meaty and you would like to copy it, then do it well. But if you don't, then at least you have that understanding that okay, let me wait and watch. Are they going to do something in that space? If they end up making a profit, if they end up doing something good, then we can do the same thing. So that is why for competitor analysis, financial statements play a very, very important role. And being a product manager, when you join as especially as a junior PM, there is a lot of competitor analysis that you are being asked to do. So be prepared to read a little bit of financial statements. Be prepared to talk about their products. Be prepared to talk about where they're marketing, all of that pricing component of it. This is all that it captures. Now, just to reiterate here, now, balance sheets are important for product managers. They do contain a lot of important and interesting information that a product manager, needs to know. It helps him to understand the financial condition of customer, competitors, even your own company. And as a product manager, you absolutely do not need a degree in accounting to be effective in your job. You just need to understand the basics: what is asset, liabilities, debt, shareholder equity, and pretty much sometimes just on the surface level that we just spoke about, right? And only if you feel that, okay, this is something that I'm going in depth, I would really like to know about because this is something for my understanding, then you can go. Or for the commercial discussion that you really need to know something, then you can go into it. Or you can take some financial, of course, again, from someone from the financial team, their help to read through competitor or customer's financial statement to get more understanding. But this is only required if you need some kind of commercial discussion, and or you would really like to know about it just because you're curious. They are also important because they help you understand, as we spoke about your competitors, a hell lot of stuff, right? And because the news articles could be fake, the media that they generally start promoting that this is what we are doing or this is what will be coming out could be fake, but the financial statements can't be fake. They actually give you a true health check. So that is why it is utmost important for you to understand them. And they also give a very good indication of people's weakness, what the company's weakness, what are the constraints, where are they investing, which is again, it's very important for you to know. Um, so I'm just gonna pause because I think I've been speaking a lot. And if you are awake right now, please ask questions because that would be really, really okay. And I know it's too much. It is a lot of information to take in one go. Depends on the company. Sorry, who asked this question? Yes. So the question, how often is a balance sheet a deciding factor in the cases that you mentioned, or in the application that you mentioned? So there are two ways balance sheet can be used. One, as I mentioned, as an example, it was for a commercial discussion with a client, and other could be for a competitor analysis. So, for example, but for a competitor analysis, you will be mostly looking at income statement. If you have to put it on a paper, what is the revenue, what is the operating profit, what is the net profit. It depends on company, to be very honest. It depends on the company. If it's a b2b, heavily b2b company, then this could be happening very often. And if it's just b2c, then definitely it's not, you know it's not something that you will pay that much attention to on a daily basis. You will only pay attention when you're doing a product thinking. uh, Hope I've answered your question, Hari Krishna.
Sonal, I have a question.
Yeah.
Sonal, when looking at the methods, you told the debt to equity ratio, right?
Debt to asset ratio.
Debt
Yeah.
to asset ratio. So when you say debt, it is the overall liabilities,
Yeah.
all
Yeah.
liabilities together, right?
Yeah, so exactly, uh, debt, yeah, exactly, all total liabilities. But
So that
debt,
means the current and the the long term and the short term liabilities will be accounted there when we look at the debt to asset ratio, or do we only need to consider the long term?
no, it would be depending, it would be both, most likely.
Okay.
uh, yeah, it would be both, because when you talk about, as we spoke about, actually, if you go back to the slides, when we spoke about debts as well, we spoke about that debt, they are they are taken care of in the liabilities section. So if it's something is due within 12 months, then within a year, then it's a current liability. Otherwise, it's a non-current liability, right? It's a long-term liability. So debt also makes both part of current and non-current. So yes, so debt is something like exactly it's like liability to asset, but generally you want to know just from the debt component. So if it's something that from a liability like a bond holder or something that you think that is not relevant for that company, then you can skip it. But mostly it would be liabilities. Yeah, complete debt will be you get me that the whole debt is either sitting in current
Yeah,
or non-current liabilities. Yeah,
yeah, I got that. I got that.
yeah, yeah.
Yeah. There's also another question that I need to ask is, so if we are a B2B product manager, or if we are in the B2B segment,
Mhm.
most of the times we need to know about the financials when we financials of our potential customers or potential partners, uh, when we are getting into a negotiation state, or when we are into a when we are doing some kind of research works that would help us to
Yeah,
position ourselves, right?
yeah,
Basically,
yeah,
so for negotiation, for positioning, and for a better understanding about the risks involved in a potential partnership or potential sales deal is what is important for a product manager in the context of understanding the balance sheet of a balance sheet, right?
yeah. Because the reason behind that is, as a product manager, how do you see that your product is bringing value to the company when you see the financial contribution, right?
Okay, yeah.
Yeah, mostly it's by financial contribution that my product made $1 million for this company. Great.
Yeah.
Now, when you talk about sales team, sometimes sales teams target is very different. Sales team target is how many contracts did you got in, how many companies did you actually signed up.
Okay.
So sometimes what sales teams does is that though they have all the right intention,
Mhm.
sometimes they either tell a little bit wrong things about the product, or the product can do this and that. And I've seen it in a very live environment where the sales team would go and promise god knows that the product will do this, but
Mhm.
product is not doing that much thing. Secondly, they would negotiate price literally to the core, that they don't think that the product is going to make profit or not. What they care about is, oh my god, this is how much business we brought into the company, right?
Mhm. Understood.
So that is why product team mostly works closely with the sales team if they are actually looking at a very big potential client to come in, to understand first of all that the product, as is me, you would be there, right? So if a client has an question to ask you as a product manager, does your product do this? Or if we would like the product to do this, can this feature be added? Could this feature be added or something? So you would as a product want to be involved in those discussions so that you can answer those questions accurately and correctly, so that there's no shocks for the client afterwards. Because many times, how many times have we seen the conversations where someone has entered into the company, a client has entered, and they're like, I didn't know about it. But you told me that the product is going to do, but pretty much it's not doing what I'm asking. And those commercial discussions
Mhm.
are so far into it, there's so much paperwork involved that it's not easy for client to leave as well. And then you have one dissatisfied client. And from your perspective, because you want your product to make maximum money and you want a good deal for yourself too, you just don't want a client to come into the business just because you want to say, I have now 10 clients. You want your product to be profitable. What good is it to have 100 clients on your product if the product is not making money, if
Makes
you're
sense.
literally giving your product for scrap? So that is why it's important for you to understand those things, so that in those commercial discussions, if sales is really giving a really heavy discount onto to the product,
Mhm.
uh, then you can simultaneously, on the side, have those discussion with sales that this is what the balance sheet looks like. This is, I think,
Makes sense.
since the company has this much money to make, why are we giving them this much discount?
I understand. I understand. So yeah, that's why I have had a similar experience when I was looking at some change requests that came in from a very big customer in my previous project engagement, and yeah. So for getting that change request actually up and running, we might we were looking at a probable expenditure in terms of integrations with another third party vendor. And yeah, it didn't went well at the end of the day, because we were crashing into a loss, because the cost that we incurred year on year for that third party vendor integration was, was not cutting a profit margin in terms of the customer revenue that came in. So
Yeah,
yeah, if we were able to look at it properly, then probably we would have understand it and got a better understanding, and could have positioned a better deal in front of the customer. Yeah, I understand your point right now. Yeah.
yeah, yeah. And that's just, this is just the reality of the world that we live in. Ideally, everyone should be doing their job. Sales should be exactly doing what they're supposed to be doing, completely representing the product, even with the third party integration, what you're talking about, and not heavily discounting the product. But this is exactly how in the real world, as if you go through the situation. So that's why it's important for you to understand those bits. Any other question? Questions?
Do we need to ask any questions to just to check quiz on them?
They are awake. They are attending it on Friday evening. Nitin, I think they've done their part. They've enough. They're not drinking cocktails at the moment. They're attending our session. I think that's enough motivation for
Great.
them.
And yeah, yeah, these folks, they are currently having university semester exams up running, so most
Yeah,
of them.
yeah,
And they have shown really good enthusiasm to stay with us till now,
yeah,
so
yeah,
kudos. Yeah, we have got some good learners, right, in our
yeah,
community. Yeah.
yeah. Very, very good.
Yeah,
Exactly.
happy. So can we wrap?
Yeah,
All right, I think you need to sleep.
yeah. I think yes, I will. I will.
Yep. Please, you look so tired. Please get some rest. Right.
Thank you. Thank you. Thank you.
Thank you
Thank
so
you.
much,
Happy.
Sonal.
No problem. Thank you guys again. It was really, thank you for asking questions. Makes me feel good that you guys are listening. Thank you, Aparna. Right. Bye
Bye.
guys. Have a good
Bye.
night.
Ta-da. Thanks guys for joining.
Thank
We'll
you.
see you in another power packed session soon. Bye.
Bye.